Okay, everyone is here from our side. I see Carol. Carol's there. You waited for Harold, I think.
Yes, yes, he
Okay,
should
we'll
be
give it
joining
another minute or so.
shortly. Um, I'm kicking off, so it may be taking him a little while to get in, so we can always start without him.
Okay. Well, first of all, we wanted to welcome you, Carol. We've really appreciated the partnership that we've developed with GRI over the last few years. That I think it's existed well in advance of that time, but it's really intensified as we got into more the sustainability assurance game. Um, we've appreciated all your help and help in getting us to a final standard, IAASB 5000. Um, like with many things on that standard, it was just the the beginning of of a long path ahead of us, I think, and we hope that our relationship continues to strengthen. So, I'm introducing Carol Adams. She's the GSSB chair at GRI. We've had Carol to the board before, but we're really thrilled to have you back again. Um, I think you have some slides that you're going to share, so if we'll put them on the screen for you. They're on the screen, and we look forward to hearing from you.
Well, thank you very much indeed for having me back again, and congratulations on the publication of ISSA 5000. Delighted to see that there. And we're very pleased to have been involved in the process through speaking with your board and through focus groups. So thank you very much, and delighted to see the standard there. So you have had these slides in advance, so I'll go through them fairly quickly, highlighting the main things to leave time for your questions at the end. So if we could move to the next slide, please. So 78% of the world's largest companies use GRI standards. This is recent up-to-date KPMG data. The number of downloads has increased significantly over the last few years. So we're not really expecting that use of GRI standards to decline in any way. It's continued to increase over the years, and we're expecting that to continue. We now have over 14,000 organizations reporting using GRI standards. Next slide, please. In terms of uptake, this is the latest KPMG sustainability reporting survey, and they looked at reports for the year ended within the period to the end of June 2024. So this is really up-to-date data. The top two lines on the graph on the left. First of all, the first number is the top 250 companies in the world that are using GRI standards. The second line is an average of the top 100 companies in 58 different companies. So 5,800 companies, and 71% are using GRI standards. You can see that the uptake of IAASB standards follow that, and stock exchange requirements below that. On the left-hand side, you can really see that the uptake of GRI standards is worldwide. There's not one area that particularly dominates the use of GRI standards. They're used across the globe in large numbers. Next slide, please. And so GRI monitors companies with revenues of over $250 million, and 36% of those companies use GRI standards. And you can see the use of other frameworks within that population on the bar chart there. Next slide, please. And again, this is some more adoption data showing the percentage of companies with revenues over $250 million. and also the percentage by market capitalization in a range of different countries. So quite a significant uptake of GRI standards. Next slide, please. And I'm passing over to Harold, our standards director, who's joined us to discuss this part.
Thank you, Carol, and welcome to you all. Good to meet you. Let's on the uptake of companies. Also, let's have a look in the uptake from a regulatory perspective. So, since 2006, we have a database which is created together with the Stellenbosch University and the King's College, where we have the resource where we show globally what is the trend on voluntary, regulatory, mandatory, semi-mandatory uptake of the, I would say, the sustainability reporting policies. So to the next, please. And what you see is over time, basically especially since 2023, but over time we saw it growing, and now by now it accounts, we can say, voluntary frameworks account 58% of the policies set around the world. We see 240 new policies added, and the database tracks 2,677. It's an impressive number of policies. Let's go to the next. Basically, in the latest research, it shows a tremendous amount of references in different ways. So mandatory, partly mandatory, or voluntary, or pseudo-voluntary, I have to say, in the regulatory space. So 261 policies is issued in 82 jurisdictions. Let's go to the next. And of course, this database is freely available. So this will be in the slide, so you can find the information. And you can also see that from different perspectives, different stakeholders, so financial regulators, stock exchanges, governments. So here you see an overview of where the most of the references come from. Let's go to the next. And to give you some examples, so we have back to you, Carol.
Okay, yes. So we're very grateful, of course, to IFAC and KPMG for tracking the use of the standards, and you can see the increase from Harold's presentation. There is both on references in policy and increasing use of the standards by corporate reporters. We are, looking at how policies and standards are aligned with GRI standards, and there are mandatory reporting requirements aligned with GRI standards in the EU, of course. We were heavily involved in developing the ESRS in India through the work of the Securities and Exchange Board of India, and in China, the Stock Exchange Sustainability Reporting requirements align with GRI standards disclosures. And then there are a number of areas where GRI standards are explicitly required, and examples would be Taiwan and Egypt. And if we could go to the next slide, please. And these are mandatory reporting policies that specify that GRI standards can be used for compliance, not must be used, but can be used. So a number of jurisdictions there, as examples, Sweden, Jordan, and Morocco. And the next slide, please. And, this is really, just to see this increase in uptake is important in terms of accountability, but it's also important in terms of better performance by companies, because we know that once companies see the data, they start collecting the data, they're reporting the data externally, they start to manage their impacts within the organization. And that, of course, is also not just about managing the impacts of the organization, it's also a way to manage the risks that these impacts present to the organization and to get a heads up of what those risks might be. Next slide, please. And this is the most recent information that we have on sustainable disclosure assurance. So you can see from this that the GRI standards, this is, I think this is the most recent information here is 2021. They were certainly the most externally assured reporting standards by a long way, and showing a steady increase over time. And this we consider extremely important. External assurance over the sustainability reporting, whether it's mandatory, as in, say, the European Union, India, and so on, or whether it's voluntary, the external assurance is particularly important. Next slide, please. And this is adoption of sustainability assurance in GRI reporting in companies with revenue over $250 million. And these numbers we would like to see a significant increase in. And the next slide, please. And this is how we see the sustainability or the reporting landscape, the corporate reporting landscape, and where GRI fits in this. So you've got the financial materiality standards on the left-hand side there, the key ones being those from the IFRS Foundation and FASB in the US. And then we have the impact materiality provided through the GRI standards set by the independent Global Sustainability Standards Board. Next slide, please. Double materiality, of course, is a term that the EU uses. GRI refers to an organization's most significant impacts, and the GRI standards require organizations to identify and report on their most significant impacts. And we believe that these lead to risks for the organization. So our standards are not asking organizations to report on everything covered in the standards, but to identify the most significant impacts. And the next slide, please. So we are in regular conversations with the IAASB at both the standards board level and with the technical teams. And we are working on this articulation of how of this global reporting system. And we believe, both the IAASB and the GSSB and GRI, that an IFRS-S plus GRI solution at the global level is what is needed in order to provide the information on sustainability that a whole range of stakeholders need. And so we welcome the launch of the IFRS-S standards, because the disclosure on risks is at a low level currently, and that is something that we acknowledge and know needs to be stepped up. And we have 2 MOUs with the IAASB, the first issued in 2022 and an addendum in May this year, where we're particularly looking at how our work on biodiversity fits together. GRI, of course, released the biodiversity standard, GRI 101, early in this year, which fits very closely, and we work very closely. Harold in particular worked very closely with the TNFD to develop that standard. And moving on to the next slide, please. And also the teams recognized, and this was a GRI initiative, that we would get a lot of questions on how you go from the GRI greenhouse gas emissions disclosures to disclosing what's required under IFRS S2. So we initiated a process of working with the IFRIS technical team to develop this interoperability guidance to show organizations who are already reporting using greenhouse gas emissions under GRI 305, where the similarities were and where any gaps were between GRI 305 and the IFRIS S2 standard. So we have this interoperability guide here to help increase the take-up of reporting using the IFRIS standards for those organizations already reporting using GRI standards. The next slide, please. And back to Harold.
Thank you, Carol. Yes, so Carol already explained a little bit the major developments in the broader reporting landscape, which most of you are aware. So next to our strong cooperation with IAASB to create this global system. We also work from the start with EFRAG to ensure that the GRI concept, GRI principles to be embedded in the European regulatory standards. So this, for those who don't know, but we had this co-construction relationship already back in 2021. All was focused really on achieving as high level of interoperability. And this resulted now basically in that the impact disclosure within the ESRS is fully built on the GRI standards, also from the definition perspective. So in general, you could say if a topic is material and no ESRS and an ESRS is this is almost in correlation. If a topic is material but is not, no ESRS is available, which is for several aspects. Most famous one is tax. The ESRS directs companies also to our GRI standards for disclosure on that topic. And a lot of guidance is given by European, by EFRAG in the ESRSs. So next slide, please. Yes, thank you. So what does it look like? So as a result where we are now, so basically we can say based on our comparison and mapping that we achieved a very high level of interoperability. On the impact reporting side, we have published several the documents. We will continue. So our mapping document, interoperability mapping document, we recently just updated in November to assist reporters and everybody who makes use of the standards. And you can also say that the entities reporting on the ESRS can be considered as reporting with reference to the GRI standards. So this is and this very much focuses on this combination of the broader reporting landscape, both globally and also in certain jurisdictions like in Europe. Let's go to the next. And what are we working on now? So much is focused on further guidance, also on existing and new sector standards, how to ensure the right level of reporting, but also on education and training. So we did launch an academy also together with the European EFRAG group, and this is out there. And we are working we will continue working on the XBRL taxonomies to ensure a simplified tagging, and also, of course, to make sure digital reporting in its full force can be rolled out. Next. So these are some examples. You can download them, can view them afterwards. You can find them. So the joint GRI EFRAG interoperability index and a data mapping on the right-hand side. It goes both ways. So and it is indeed already finalized, the latest one in November. So for your reference, let's go to the next.
And where the approach to developing standards here is particularly relevant to reporting on an organization's impacts. So we use a multi-stakeholder approach. The GSSB has representations from all of these constituencies on it, as do all of our technical expert committees and project working groups. So we are getting this input from all of these different stakeholder groups. And we are developing the standards based on global best practice and global pronouncements. Next slide, please. This is the standard structure. The universal standards, the first one covers the principles for disclosures, and a lot of these are aligned with those in accounting standards. There are some additional ones that are particularly relevant to reporting on impacts, but you would recognize a lot of those principles. GRI 2 is for general disclosures about the organization. GRI 3, I will spend some time on a moment, because this is the one where assurance is particularly important. These are disclosures about how an organization determines its most significant impacts, and hence its material topics on which it will report. And then we have the sector standards and the topic standards, with the area that Harold is particularly responsible for. The next slide, please. So this comes from GRI 3. This is the standard which requires organizations to identify and report on its most significant impact. So this, to my mind, is the most important standard, because if organizations don't have a robust process to determine their most significant impacts, then what they're reporting on may be incomplete, and they may not be reporting on the right matters. So the process of identifying and assessing the most significant impacts is detailed in GRI 3. There's guidance on how to do this. And it involves a lot of communication with stakeholders and experts. The sector standards allow organizations to understand the context in which they are operating in. So this is the first step. The sector standards identify what are the most significant impacts in general for that sector. But this doesn't stop organizations also having to think about the most significant impacts for their company. And the next step goes on to getting them to identify the actual and potential impacts of particular issues through engagement with stakeholders and experts. And then identifying the significance of those impacts before then a step for prioritizing those impacts. Now, this process is really important, and this is where we want to see more assurance, more external assurance. If this process isn't done robustly, then organizations are also not going to be identifying the most important risks of the organization under the IFRS S standards, the most financially material risks, because through this engagement with stakeholders and experts and thinking about the most significant impacts, they are able to identify also which of those impacts will lead to risks and in what timescale those risks might materialize. Next slide, please. So assessing the significance of a potential negative impact involves determining its severity and likelihood of that impact. And the severity of the impact is determined by the scale of the impact, its scope, and its irremediable character. And the likelihood of the impact refers to the chance of the impact happening. So all of these characteristics need to be carefully considered when determining what to report under the GRI standards. Next slide, please. And this is important not only to the full range of an organization stakeholders, but also to investors. So investors, regulators, and stock exchanges are key audiences for sustainability reporting using the GRI standards. They're interested in this information, and we have representations from investor institutions on the GSSB, as I mentioned, that are using this information. They're interested in it because they want to make their own assessment of the risks and opportunities that arise from these most significant impacts. Many of them are long-term investors and recognize that these impacts over time will have financial implications for organizations. And many of them have an explicit purpose concerning impacts as well. And so a combination of the IFRS S plus GRI standards not only helps corporations provide information to a wide range of stakeholders, it also explicitly helps them provide the full range of information that investors need, all types of investors. Next slide, please. And so we are working on developing guidance on how organizations go from that GRI3 process to identifying the most significant impacts, the risks that arise from those impacts. We believe at the GSSB that most, if not all, of these most significant impacts will eventually translate into risks for the organization, and that determining these impacts should be the starting point of getting a complete picture of the risks that arise from the impacts. And so these impacts also affect the availability, quality, and affordability of nature's resources and the relationships on which the organization depends on, the dependencies, and they in turn give rise to risks and opportunities. And so understanding the impacts, as I've said, is a really important first step. So we are developing guidance on how to do this. We have just entered into an MOU with the Sustainability Standards Board of Japan to work with us on developing this guidance. And Harold's team are also working with the TNFD on this process as well. And we know, of course, that the big accounting firms are advising clients to start with the impacts also in determining the risks and opportunities that need to be reported. Next slide, please. And then this brings us to the work program. I'm going to hand back to Harold to cover this very concisely. And then we get to the final slide on areas where we could potentially cooperate with yourselves on increasing uptake of the standards and assurance.
Thank you, Carol. Yeah, let's go through it pretty quick. So we are having about 40 standards, so we are revising all the topic standards at the moment. We have 21 out there, so the next slide. So 21 standards on the revision, and we do not invent this on our own. We do this under the responsibility of the GSSB. GSSB decides on the work program. This ends next year, and then we will develop the new 3 years work program for 2026 to 2028. So this consists of development of new standards, revisions, development of sector standards, revising sector standards, but also implementation, translation. We translate all the standards in 10 languages, interpretations, digital taxonomy, and also cooperation, as what we just showed with, for instance, IAASB, IAASB, and all the international organizations. Let's go to the next. So to give you an overview of the topic standards, this is my area. At the moment, we just finalized the biodiversity standards in Q1. This is being rolled out with a lot of activities. We are working on 10 labor standards being revised heavily, so they're almost new. Again, this is impact perspective from what is the impact on the labor issues in your workforce. So it's not on the human capital side. Public exposure for this second set is nearing. It will be in Q1 next year, and then we will have a third and a fourth one. The climate change standard is heavily revised, and it will include now, for example, just transition disclosure. It will also include questions on to create or information disclosures on how to inform and how to put information forward on removals or on carbon credits. So this will be released in Q2. We're working on economic impacts revision. The standards we have to revise, mainly the anti-corruption, economic performance, indirect economic impacts. And we just recently start pollution to revise all the pollution-related disclosures in our topic standards. Let's go to the next. For the sectors, the GSB approved a critical market, a critical sector. So these are the 40 sectors we're working on. And we're now at the moment working, we just released mining. We will release for public consultation, the banking, capital markets and insurance, as you see in group 1. And textile and apparel is ongoing at the moment. Let's go to the next. And you will see it summarized. So again, mining released. And what I mentioned, textile and the banking or the financial services sector is upcoming. Let's go to the next. Also, we are doing research on the responsibility of GSB. So we are working on, we had discussions on how to deal with the public sector because we think it's a big driver. We also had a deeper research and discussions on how to take into account the significant impacts related to digitalization. You can imagine something with that. And international humanitarian law is something which is on the radar. Let's go to the next. And yeah, 2 examples of what we're doing in implementation. Carol already mentioned them, but we are heavily working on XBRL taxonomy, of course, and the standards related to that. And we will have next year, early next year, 1 or 2 guidance upcoming. The first one on our cooperation with TNFD on how the impacts, the impacts relate to the identification of risks and opportunities. And that, to give you an example, a location with significant biodiversity impact, if you look at it from an impact perspective, you will probably have different information you will report than if you do it directly from a risk perspective. So these are the kind of things we will work on, and we will come up with use cases where companies and reporters, and from an assurance perspective, people can have a lot of help with. I think that's let's go to the next. I think we go back to Carol. Yes.
Yes, thank you very much, Harold. So these are some areas where we thought we could collaborate. First of all, increasing the uptake of ISSA 5000 for sustainability reports developed with reference to or in accordance with GRI standards. You know, as I said, we think assurance is absolutely of critical importance, whether the reporting is mandatory or voluntary. So some GRI reporting is mandatory in some areas, some is voluntary. But that assurance is really important regardless, because you know this process. This comes to the last point there. Getting these GRI3 disclosures of the most significant impacts and that process of determining them included within the scope of assurance engagements is really critical, and we'd like to see much more of that, because without it, there is a potential for greenwashing, for companies reporting incompletely on their most significant impacts. We'd also like to see an expansion of the scope of assurance more generally for sustainability reports developed with reference to or in accordance with GRI standards. So not just the GRI3 process, but we'd like to see more of the information reported using the standards externally assured. And some of this could be achieved through joint capacity building initiatives. So, for example, developing educational materials on the importance of this increase in uptake of assurance, perhaps joint regional and jurisdictional outreach to report preparers and assurance providers also. and raising awareness of the value of including disclosures on process and outcome of the materiality determination in the scope of the assurance engagement. That last point, as I've said a few times now, being absolutely critical, not just for the credibility of GRI reporting, but we would say also for the credibility of reporting on risks under IFRS S1. Thank you. Happy to answer any questions.
Thank you, Carol and Harold. Christelle, would you like to start us off?
Thank you, Tom. Thank you very much for your presentation and this update, very clear and informative, particularly on the process that we know in Europe as the double materiality assessment, and we struggle a lot presently. I will have two very broad questions. Please feel free to address them as you see fit. First, I will be grateful for further insight into sustainability reporting in the public sector and the role of GRI in this area. I recently had the opportunity to read a very interesting paper by the IAASB, Impact Reporting in the Public Sector, State of Play and Recommendation, that was, I think, delivered in May or June 24. I must admit, I'm not quite sure what the timetable is or what the next step will be, and I will be grateful for any insights you could provide on this subject. And my second point is, as you may be aware, the European Commission is currently working on a new omnibus directive, which will include a review of the CSRD. One of the ongoing discussions surrounding this revision is the potential for sustainability reporting, especially with double materiality, to have an adverse effect on the competitiveness of European companies. I will be grateful again to hear your views on the subject. Thanks again for the presentation and the work done so far. Thank you.
Thank you, and perhaps if I could start and then see if Harold has anything to add. So yes, we are doing research within GRI on sustainability reporting in the public sector. We do know that many of the national sustainability reporting requirements and those of particular parts of the public sector do use information on impacts disclosures from the GRI standards. And there is currently a lot of inconsistency. So you get, even within, say, a particular group, say it's hospitals, for example, you get different requirements, even across different states in the same country, for example. But the GRI standards and disclosures from the GRI standards are often the starting point. So these mandatory requirements, or whether are voluntary for particular parts of the public sector in different countries, draw on disclosures from the GRI standards. So there is a lot of consistency. Reporting on impacts is really important for the public sector, as you will be aware, because the raison d'etre, a lot of public sector organizations, is to have a positive impact on society, the environment, and the economy. So the next steps there are, we looked at the initial research that was presented to us in, I think, around about June. That paper is being updated. We asked for some more work to be done, and that will be coming back to the GSSB at our in-person meeting in March to consider further. And of course, we've been working very closely with IAASB and having conversations with IAASB on all of this too. In terms of the EU and adverse competition, I guess what we find with GRI reporting and what a lot of the academic research shows is that, in fact, if you are reporting using global standards, such as the GRI standards and the IFRS S standards, then you are your performance on social and environmental matters improves. And that this leads to improvements in overall performance and ability to attract funding. And one of the key benefits of using the GRI standards is that organizations have identified their most significant impacts, and then they're able to manage those impacts, reducing risks to the organization. So, I don't see this as having an adverse effect on organizations or their competitiveness. I see using reporting using the GRI standards, the IFRS S standards, and the ESRS standards as something which brings a significant advantage to organizations. Harold may have something to add there.
Well, and maybe to add, so that's why we had it in the presentation. So you look at the adoption data from all over the world, you see this increasing year by year, and also the assurance is increasing. So I think we're not going to say something about politics, but so the figures show differently, I would say, and globally. So a lot of companies embrace this and roll this out. So this is our answer, which we already gave.
But I suppose I would say on the global scale, we'd like to see organizations outside of the EU being able to report using GRI plus IFRS S standards rather than the ESRS if they're outside the EU, because the GRI and IFRS S standards are based on global consultation and norms, and this is what the major global multinationals need to be reporting at group level.
Carol, on that point, what is your sense that if you were an IAASB's reporter and a GRI reporter in a complementary way, and all the work that you've done on interoperability, that the EU would be comfortable with a non-EU company using that for the purposes of CSRD compliance?
I don't know what the EU's view on that is, but I would think that this view is one that will shift over time. I would certainly hope that was the case. As Harold has mentioned, the disclosures in the ESRS on impacts come from the GRI standards. There is a very strong alignment with the GRI standards. It is going to be much easier for companies outside of the EU to continue reporting using GRI standards rather than have to use the ESRS. Even though there is strong alignment in the disclosures, the format is slightly different, and that does take up time of organizations to prepare to a different format with different disclosure numbers and so on, even where the disclosures are very similar. So, to my mind, it makes sense to allow an IFRS S plus GRI solution for companies outside the European Union, and I would hope that would prevail over time. That view will become predominant within the European Union.
Anyone around the table have any other questions? Sammy?
Yes, thank you very much for the presentation. I just have a quick question in here. Where does the investor stand from the GRI standards? What had been witnessed is that investors have various requirements, but the majority of investors are satisfied once there are some sort of sustainability reporting, whether it is GRI or IFRS or any other or TCFD or any other type of a framework. So if the investor is already satisfied, for example, of reporting under IFRS or IAASB actually standards, why would somebody go a step further to report under another framework as well?
Okay, so many are actually starting with GRI because of that issue of identifying the full set of risks that arise from the impacts and the dependencies affected by the impacts of organizations. And for an investor, reporting on risks is something which has not been done very well at all to date. I think many investors will want to see the impacts in order to assess whether a company is completely disclosing the risks, but also because increasingly investors are interested in impacts in their own right, and they recognize that impacts will affect the prosperity of companies over time. Also, the cumulative effects of the impacts of many organizations over time have consequences for portfolio risk. So by seeing the trends in the companies that make up their portfolio on their impacts, they can get a feel for the consequences for portfolios and the direction that things are going over time. For example, if reporting on emissions was commonplace across many organizations from a few decades ago, that trend in the corporate impact on emissions would have been very clear. There would have been data there, and corporations could have been tasked to reduce those impacts at a much earlier stage. And we're getting to a similar point with biodiversity now, where we really need to know the impacts that corporations and other organizations are having on biodiversity loss. And that's something which they're required to report under a GRI 101. So there's a number of reasons why investors are using GRI information. The World Benchmarking Alliance uses GRI data in its benchmarking, and this is something which investors look at. We also have an arrangement with the CDP. We're collecting data on from the IFRS S disclosures and GRI disclosures. So really for investors to get a complete picture, particularly for long-term investors, they need the IFRS S plus the GRI information.
Any other comments or questions? Josephine.
Thank you, Tom, Carol and Harold. I just actually wanted to echo Tom and express my thanks for your support during the development of our standard, particularly when we were doing roundtables and outreach. It was so helpful in helping us develop the standard and thinking particularly around, the examples, some of those practical challenges, it was all there in your standards to help support us in that regard. And certainly I just wanted to lend my support for collaboration, particularly around joint educational materials. I wish you well on the guidance on those starting out new to understanding the process and identifying risk and opportunities. As you will know from outreach you've attended with us on the assurance standard, that's one area where people are constantly crying out for help. They just that starting point. How do I really get my head around this? And so I'm sure that will be incredibly welcome, and people are probably already biting in the bit, so to speak, to have that right now. So I really wish you well on the development of that guidance. And if you need anything from us or the Sustainability Task Force team, please do let us know. Thank you.
Thank you very much. Appreciated that offer of help. Thank you. And again, thank you very much for involving us in the process. We really do think that expanding the scope of assurance engagements and increasing the uptake of ISSA 5000 is absolutely critical to the credibility of sustainability reporting, and particularly those processes, which is where the change happens. That's where the transformation happens within organizations by getting those processes right. Thank you.
Okay. Any other comments? Well, Harold and Carol, thank you so much for participating in our board meeting today. Thank you for answering questions. More importantly, thank you for being such a good partner. And we look forward to a continued partnership going forward, because I think implicit with what you said, but what we believe is that you can't have a trusted reporting system if the underlying reporting and assurance standards aren't strong together. So
Exactly.
So
thank you.
Thank you, and we'll stop here, and then we'll take a very quick break. Give 10 minutes before we reconvene on ongoing concern issues. So could we
Thank you.
take a quick break here, and we'll reconvene in 9 minutes now, 4:30. We'll get going.
Thank you. Have a good meeting.
Okay, could we get back to the table? How's everyone doing? Good? Warren, is the teapot hot? Yeah. Josephine, you survive it? Okay. It's getting late there. I know that. Of course, it's been dark there for 5 hours already, so. Yeah. Okay, we're going to return to going concern. I think I'm gonna go back to Ada on this, right? And we're gonna hear a few targeted issues.
Yes, Tom, thank you very much. And we have been discussing and deliberating a number of changes based on the feedback received. And I'll ask Kalina to walk us through those. Thank you.
Thank you, Edo. So we distributed some targeted revisions for selected paragraphs during lunchtime. One area that we did spend a lot of time thinking about is the adequacy of disclosures. This is requirement number paragraph 32, 33, and then the related application material in paragraphs A73 through A77. So what the task force decided to do there is, in view of the offline and plenary comments, to reinstate in view of the requirements of the applicable financial reporting framework that also provoked a change in the word to an evaluate from a determine. In addition, we also spoke about unintentionally narrowing the scope of this requirement that was previously more broad, linked to events and conditions. So we brought that back in. But we've still provided some specificity in the requirement to link to the close call and the significant judgments. So that all of those are changes in paragraph 32. The related application material in A73 through A76 has been aligned. The other change we did in this section and area was in response to comments that the essential material that was previously in the definition was more adequate to be in paragraph 33. So that was reinstated. It's talking about adequate disclosure when a material uncertainty is necessary for a fair presentation and a compliance framework. And the related application material to that paragraph has no change. That is A77, but we provided it just for context when reading the material. So that is the one area where we have the more significant changes. The other area where we have spent some time addressing offline and plenary board comments was paragraph A72, which was about concluding on whether a material uncertainty exists. Here we have clarified that it's the sufficient appropriate audit evidence is about management plans, not previously it implied it's about the events and conditions. And we've also extended it to what the further actions of the auditor are in accordance with the standard and referred to paragraph 33. So those are the changes that we've done. Let me also highlight that we looked at paragraph 19 more closely last night. We received comments on that paragraph from a different nature. So one of the comments there was that we should make that paragraph conditional on whether assumptions and data apply. Upon deliberation, the task force retained their view that there would always be an assumption and data behind the assessment. So we have not proceeded in a conditional approach. We also spoke about whether it is clear from the requirement that we are talking about the risk assessment procedures and the nature and circumstances of the events more broadly. There were suggestions to insert the word identified, but we felt if we do that, we are kind of inadvertently maybe creating the perception that everything is identified up to that point. I guess the position we had is you have to go through the method, assumptions, and data to be sure whether the events and conditions whether what you have done in the risk assessment procedures is verified, and obviously you take into account what you've done at that phase, but the events and conditions are not specifically that you have to identify them at that phase. So we have not made the change there. We also looked at the drafting, possible ways to clarify, but where we landed is that what we have in the standard now is appropriate and makes sense in terms of how the paragraphs from 16 to 19 are laid down, and how the workflow for the auditor flows. So this is a summary of the more significant areas. Obviously, there was other areas we discussed, but those were the points we wanted to make. And Tom, with that, we're happy to receive comments.
Thank you. Comments on these paragraphs? Eric.
Thanks, Kalina, and this has been very helpful. For my understanding, I was just wondering, when you get into A72, and it points you back into 33, and you go through the process of assessing the adequacy of the disclosures, and you conclude that they're appropriate in the circumstances. It says you don't have to do a qualified, you basically give a clean opinion. But I was just wondering where, I felt I was a little bit left hanging about what to do with the lack of sufficient appropriate audit evidence. Where does it go? Where do you go after that? I was wondering where where you wanted me to go with that piece of it, if you see what I mean. Is that 705, or are you expecting that there would be no, so you don't have sufficient appropriate audit evidence about the events or condition, about the future events, sort of the mitigation of the effects, but the disclosures about a material uncertainty are okay. Do I still have a qualified opinion because I didn't get sufficient appropriate audit evidence about management's plans? That's where I was just sort of stuck at that point.
Okay, so so Eric, what we did do is also separately, we have not shown this to the board, but we've mapped out the steps and the process, and the way that there's two conclusions. The conclusion on the appropriateness of the basis of accounting, and then there's a conclusion on the material uncertainty. There is an interplay between those two conclusions. So once you're in the space of concluding on whether the basis of accounting is appropriate, because that conclusion is based on obtaining sufficient appropriate audit evidence, you may be in a scenario where you are unable to obtain sufficient appropriate audit evidence, and on that basis you would go to 705, which is what the application material in paragraph A67 points you to. So that so on the other hand, if you do have sufficient appropriate audit evidence, there's two possible outcomes. The basis of accounting may be appropriate, or the basis of accounting may be inappropriate, irrespective of what management has done. This is from the auditor's perspective. If the basis of accounting is inappropriate, then you would follow paragraph 38 and the related application material A95 and A96, which would take you to an adverse opinion, or possibly an unqualified opinion in an extremely rare circumstance where you would emphasize the matter. If your basis of accounting is appropriate, but then you go and you have to conclude on whether a material uncertainty exists. And that conclusion is, in our view, a yes or a no conclusion. So you can get to a limitation in scope, but that would happen at the basis of accounting level. We've mapped it out. There is something on paper. We will probably add some clarity around that. It's quite a technical point. So yes, you can go to 705, but it will be on the basis of your conclusion whether you've obtained sufficient appropriate evidence on the basis of accounting, not when you're in a material uncertainty. And this is the point we wanted to clarify there.
Okay, Sachika.
Thank you. And first of all, thank you very much for task force for your hard work. And I have two comments. And first one is about paragraph 32. And I support the direction. It is very helpful. So thank you very much. But my remaining comment is that I think paragraph 39, small d, which is about written representation, also talks about disclosure about the significant judgment made by management in concluding there is no material uncertainty. So I wonder, maybe we also need to change that, reflecting the change made on paragraph 32. And my second comment is on also A72. I think my comment is a kind of similar angle with what Eric said. I am still not very clear about the relationship with scope limitation in 705. And I have two questions when I read this change. And my first question is that, is there no case that the auditor obtains sufficient appropriate audit evidence that there is a material uncertainty? And my second question is that if there is even a condition that may cast significant doubt, and management explain that the auditor about their plans for future action, such as borrowing money from the external party, but management refused to provide relevant information to the auditor, for example, prevent the auditor from requesting the external confirmation, and therefore the auditor is not able to obtain sufficient appropriate audit evidence about management plan. It is categorized as material uncertainty rather than scope limitation in accordance with 705. That is my two questions that I read when reading this material. That's my comment. Thank you.
Okay. Robert?
Well, thank you. And also thank you to you, Kalina, and the task force and Edo about making these changes explicitly to paragraph 32 and I think 33. I do also have the same comment with respect to A72. If the auditor is unable, and this is the only case you're describing here, the inability obtaining sufficient appropriate evidence, audit evidence, you conclude there is an automatism that material uncertainty exists. I still question this. However, yet the conclusion to be made is from my perspective, then that we have a scope limitation. So I'm fully in line with what Eric questioned and also Sachika questioned. We can, or I can provide some wording how we would rephrase it. I will give it to you, and then you can look at it. The other comment I would like to make is with respect to A74 and 75, the new ones, where you made the changes to be in line with your changes of requirement 32. In A74, you describe the close call and the close call situation. Significant judgments have been made, but no material uncertainty exists. And you say the auditor may determine whether the disclosure is appropriate with respect to fair presentation or compliance framework. I'm a little bit I struggled a little bit with the last sentence. in this paragraph or in this 74 paragraph. This may also be the case, for example, when no disclosures are explicitly required. And then if I look at A75, by deleting the last one, you're only describing the fair presentation framework here and relevant disclosures to be made. Wouldn't it be easier from a logical standpoint that the material in paragraph A74 be moved at the end of 75, and then probably the misleading test ought to be deleted, and then we have a flow for the way it is. It seems to me 74 and 75, the logic is somehow being disrupted. But I can share this also offline with you. Thank you.
Okay, Julie?
I'm going to continue the story on 72 because I'm still not convinced that you would always get to the conclusion that it's a material uncertainty, because it could very well be that management has a plan. They provided you some information. You've assessed that information. You've said, I need more information to satisfy myself that this is a mitigating plan. They can't provide you anything else, but they've not disclosed that either, because in their mind, it's not a material uncertainty. They have a plan. They feel it mitigates. And you kind of get in this loop now, because you're saying, no, auditor, I think you have a material uncertainty. Management says, I don't think I have a material uncertainty. They have not disclosed it. So there's no disclosures to go back to in 33 to evaluate. Do you not then have to go to another step of saying, so what's the next step then? Because I'm lost as to what the next step is in that scenario.
So in that scenario, because I think it's if management needs to come up with plans to mitigate and address the situation, that is a fairly high threshold to meet. So we need to have sufficient appropriate audit evidence to be comfortable with those steps. If they can't convince us, then it's a material uncertainty. That's what the standard says. If they can't convince us with evidence that their plans are either feasible or address the situation, if not, it's a material uncertainty. And then you go immediately to paragraph 33 that says, are the disclosures in respect of a material uncertainty there? And if not, then you follow that process, because if management doesn't think it's material uncertainty, well, and they don't disclose it, then you need to consider qualification or an adverse.
But you sort of get into the qualification via another way, I guess is what I'm saying. Because now you could say, well, I actually have a material misstatement in my financial statements.
Because
right?
they don't disclose the material uncertainty.
I think for me, it's also the use of the term sufficient appropriate audit evidence in here that triggers you to automatically believe you're in a scope limitation scenario. Personally.
Yeah.
That's one of the things that's tripping me up on this paragraph too. I understand your explanation, Ado, but that is tripping me up a little bit.
Because we have a few questions on this, we've prepared a flow diagram that may very well feature in our educational material, etc. That is probably useful to discuss with the board at this point in time. So, Michelle, if you can have that up.
Josephine, you have a comment on the same topic?
Let's deal with that first.
I do, but I also have a comment on 32, which is sort of going against the grain of other people's comments on it, which I wanted to raise as well.
Yes, well, let's stay on this topic first, and then we'll let you go back to 32.
That's fine. Thank you.
Okay. Do you want to come in now? Josephine, did you want to come in on this topic?
On 72.
Yeah.
Yeah, the only thing I would also say, Ado, is I agree with the other comments that are being raised as well. You may also have the condition or situation where actually the going concern assumption is not appropriate, but you can't come to that conclusion either way either. And that was the piece that was in there originally that's also missing. But yes, maybe your mapping here will help us. Thank you.
It's fair to say that unless I put binoculars on, I cannot read this on the screen. And actually I can't read close distance as well, but I can read long distance relatively well. So I don't know if there's a way to get this to people, email it to people. Would that be a possibility? So at least maybe everyone could put it on their screen. Warren's looking at it closely already too. Josie, do you want to come in your 232 comment now, so we could table that while we get this flow chart to us?
Yeah, thank you. Sorry, no, I just bear with me. So the only thing, thank you. I know that we've made some progress here because we're now starting to reflect the fact that we do have to consider this in view of the requirements of the framework. And I'm still concerned here that we've tied it only to the close call. And I understand that we have this issue generally with our language on what does including mean? Does it mean as well as considering, which, you know, or where appropriate, including the significant judgments? And I think that's the missing step here. So if we want to talk about providing adequate disclosures about the events and conditions, then including the significant judgments would have to be, and where appropriate, significant judgments, because we use this in our standard as language to mean that's our close call situation. And if we had that, then our A74, notwithstanding Robert's suggestions in terms of the geography and lining it up so it flowed a little bit better, that makes more sense, because A74 says, and in this scenario, you have this sort of odd close call situation. But if we put it in, if we have the language in here now, we're still tying it to that close call, and that moves away from where we were in extant and in our exposure draft. And it actually, it's that broadness that we had. Sorry, it's very late. The broadness that we had in 32 before is then lost. So if we can either have that caveat or remove significant judgments, which I know, Ado, you're reluctant to do, but just have that caveat, including where appropriate, significant judgments, then I'd be more comfortable with the changes to A at 232. Thank you.
Josephine, would it be a stretch to ask you to provide a little language on what specifically you're suggesting?
No, I can do that. I could also just put it back to how it was before, right at the very beginning, and it would be fine as well. I'll send it along. Thank you.
So Josephine, that is exactly what we try to achieve by using the word including, because including is not only this, but it is about events and conditions, and also when significant judgments are made. So and so you're suggesting to insert including where appropriate, the significant. Is that your suggestion?
Yes, because I just feel like it's just not clear enough. I believe that people would interpret that as meaning we're talking about the events and conditions and the significant judgments, the close call here, because it's so rich in our standard where we explain this. I think people would just jump and assume immediately that's what we mean. You only have to do 32 where you feel like you've got this close call situation.
Yeah. Okay, so our intent was how you clarified it, and I thought including captured that sufficiently. I'm not adverse to inserting those words if that makes it abundantly clear.
Thank you.
Okay. Should we go, everyone get the chart? Okay, do you want to put it on the screen and then you guys can walk through it?
did not get it, but it's just.
Okay, so did everybody get the chart? Yes. So, Edo, do you have it?
It's fine. I know it.
Okay. So we looked at the two conclusions that are in the objectives for the auditor and that also come in paragraph 30 and 31. And we looked at the possible outcomes that could happen with those two conclusions. And obviously there is an interplay between those at a certain point in time. So the first requirement, which is paragraph 30, is a conclusion whether, first there's two bits here, whether sufficient appropriate audit evidence has been obtained, and then a conclusion on the appropriateness. So the first dark gray box asks the first question in that requirement. Has sufficient appropriate audit evidence been obtained regarding the appropriateness of management use? If it's no, then it's a limitation of scope, and then you're in 705 territory, which is also supported by the requirements and application material that listed there. So if you look at A67, it takes you to 705. If it's a yes to that question, the second conclusion that the auditor needs to address is whether the basis of accounting is appropriate. If it's a no, then you go to 38 of this standard, which tells you it's an adverse opinion, unless in extremely rare circumstances, the auditor is able to provide a clean opinion, in which case an emphasis of matter may be helpful, which is addressed in the application material A95 to A96. If it is a yes, then the auditor proceeds to conclude whether a material uncertainty exists. And at that point, it's a no or a yes, based on the audit evidence. And this is where the plan is very relevant to be clarified, that the audit evidence about that plan needs to be sufficient for the auditor to be able to make that conclusion. And this is where A72 is aiming. So in that case, when you're concluding on a material uncertainty, you're still in our standard 570. If it's a no, you evaluate the disclosures and the implications for the auditor's report. Obviously, if the disclosures are not appropriate, the standard provides guidance, what you do. In the other scenario, if there is no material uncertainty, then the audit actually went, I don't know, yeah, if there is no material uncertainty, the auditor goes to paragraph 32, and this is where they address the disclosures, the adequacy of the disclosures in the view of the applicable financial reporting framework. And in that case, you may end up in 705 as indicated by the application material. Or you may end up in our standard when you continue following the requirements. So this is how we've mapped it up. And we do recognize that there is an interplay there, because management plan informs both the appropriateness of an accounting and the conclusion on whether a material uncertainty exists. Which is why we've placed it in the green box up front. Edo, I don't know if you want to add something to that?
No, I don't. And I think this was, and that's one of the reasons why I want to have this feature in our materials, because and I appreciate the confusion that we potentially are causing by using sufficient appropriate audit evidence in the context of plans. But that is a management. So if they are in the situation that they need to make plans, we need to have fairly firm evidence that that's going to resolve the situation, because otherwise that's a material uncertainty and not a scope limitation. And we need to keep our feet to the ground. So this is, you can't say, well, we don't know if there's a material uncertainty or not, because management has not been able to provide us with sufficient information.
Okay, so in response to Edo, I thought Robert and Sachiko both raised their cards, right? I want to see, Julie, are you going to want to respond to it? Okay. I'm just trying to get keep the conversation flowing. So I just want to make sure who's responded to Edo. So Sachiko, did you want to come in here?
Yeah, I think maybe I'm still digesting the, the chart, but my current thinking is whether we can, show such a linear manner. In my sense, these steps are very, integrated, and also, as Julie said, my instinct thinking is that sufficient appropriate audit evidence, link back to 705, which makes me, matters complicated. That is my, current thinking.
Okay, Robert?
I do acknowledge and concur with the view, Edo, that if management has plans for future actions, you need convincing audit evidence. However, if you don't get this audit evidence, and I'm looking at this chart, I'm landing up, it says no, and I'm landing in limitation on scope. And then the whole process stops. And there is no way how I could get in this chart down to the bottom in order to conclude a material uncertainty. This automatism is not prescribed in this chart, described in this chart. How could I get there if there's a no in the first gray bar? And this is by looking at the chart, and still I'm not convinced that we get to this automatism beyond looking at the chart or not. Thank you.
Okay, so let me ask the question then another way. Because I think you're looking at the wrong box, Robert. So it's the bottom box that we're talking about, because because you first need to have sufficient appropriate audit evidence regarding the basis of accounting. So is there a basis? Is management appropriately applying the going concern basis of accounting? Yes, no. That's where we need to have evidence. And it's only subsequent to that that you are going to determine, is there a material uncertainty or not? Because that's the next step that you need to do if there are events and conditions. And that's where you get at the bottom box, where let's say that management tells you, well, look, we have a plan because I have good friends with the bank and they are going to finance me. And we're going to say, okay, show me. And they do not have convincing information in respect of the intent, or, well, their intent may be so, but they don't have the ability to show us anything that the bank is indeed willing to finance it. Well, that is a material uncertainty.
Edo, can I add
Yep.
to, because I'm with Robert where I ended up in the chart. And I think I ended up there in the chart because of that green box right above. It says perform audit procedures to evaluate management's plan for future actions. You go to the next box, it talks about sufficient appropriate audit evidence. No, takes you to the right. I don't ever get down to the bottom.
Which is exactly where you should be at that point, because you're unable to conclude at that point. If you are in a situation to evaluate the plan and you have a scope limitation in relation to your plan, the question arises, can you conclude on the appropriateness of the accounting at that point? If you've arrived there. So that's why it takes you to 705. And 705, the conforming amendment there says that you're unable to conclude. So yes, to your point, Robert, you don't get to the end of the chart in that situation. You end up in 705.
No. I'm still confused. And the fact that we're going around and around in this tells me that it's confusing. Maybe I'm the only one, but I'm not, I
No,
thought the
you're
chart
not.
was going to help me and I'm not sure it
You're not.
made it clear for me.
then there's nothing left for us to do but rethink this
Joseph,
and come back.
maybe Josephine, you wanted to come in here?
Yeah, Ado, thank you. And to me, the chart makes perfect sense in terms of the logic. First of all, do you have a sufficient appropriate regarding appropriateness of management's use of the going concern, and then based on that, does the material uncertainty exist? But to Julie's point, then in some ways it's a bit of a loop, because I don't think you can get to the first point if you now have an issue around management's plans for future actions, and that's the problem with that loop. I mean, I totally understand the logic in terms of these are the steps that you make, but I think when you come to does the material uncertainty exist, you've already got the evidence, because it says so in the two boxes above. So I think from that perspective, maybe the issue here is we're wedded to maybe the heading in A72, and in A72 is just trying to tell the story about the logical conclusions in terms of you gathering evidence from your evaluation of management's assessment, everything you needed, the method, the data, the assumptions. And then if there are certain aspects of that, you need to work out, well, what are the mitigating events and all of that. And that logical flow of gathering sufficient appropriate evidence goes throughout this process, not you've decided on grey box number 1, you've got it. And then on grey box number 3, suddenly you don't have it. It doesn't really work that way, even though I understand from your thinking where you're trying to get to. And I think maybe if you just think about it as the story, from the perspective of everything you need to gather evidence on, regardless of whether you're looking at the appropriateness of the basis of counting or a material uncertainty, it all leads to sufficient appropriate evidence, and what is that on? Then I think maybe it will make more sense in the application material if you try and think about it from that logical flow rather than these boxes potentially.
Okay, I think, Ado, you think you wanted to come back and think.
Yes, well, that's helpful, Josephine, and that will shape our thinking. I'm with you, but we haven't made this clear through this schedule. This was quickly thrown together, so we'll make this clear.
Okay. Julie?
You'd be happy to know this isn't about this paragraph. Kalina, I know you haven't made a change to 19, and I had raised that in the plenary session yesterday. Could you just again tell me the reasoning for not bringing that paragraph with the change to the turnaround or the targeted issues paper? Just so I have it clear in my head why there's no change to that paragraph.
Okay, so we looked at the suggestions there. There was a few comments there raised in plenary. I think Christelle had one about the making it conditional on whether assumptions and data apply. I think we thought through again about that, and we felt that the position we had taken previously, that you would always have assumptions and data, is a scenario that we believe this holds there. So we didn't go for the conditional approach. There was also a comment that we should be specific about identified events and conditions, and that comment, we looked at it in terms of whether it should be brought in. We also considered other views there, that there would always be events and conditions, and we don't want to imply that something was identified specifically in relation to performing any further procedures for the method, assumptions, and data. In this respect, we didn't want to bring it in because you really don't know after you've done risk assessment procedures. The requirement appropriately refers you back. It refers you back to think about nature of events and conditions more broadly. And then when you go and perform the work for the method, assumptions, and data, this is where you get your confirmatory evidence about the events and conditions and what management has there and so on. So we didn't want to specifically point out that any events and conditions are identified or not. This was the reasoning there. Maybe to explore this further, I also recall that you mentioned that the threshold may cast significant doubt was something that was causing you some discomfort with that. Yeah, and then we do refer to events and conditions in other places in the standard, and the meaning is well understood. So we can consider looking at that particular phrase in the requirement.
It's that piece of it, right?
Yeah.
Because I think what we're trying to say, and I have no disagreement with the, that you need to perform the steps in 19. We talked about method, assumptions, data, all over. So that part of it's fine. I think it's the addition of including the nature and circumstances of events and conditions that may cast significant doubt. I don't know if you even need those words, because it should be tying you back to your risk assessment procedures to then perform what you need to do in 19. And then the addition of those words, I'm honestly not even sure if you need them, because if you flow the logical flow of all of your requirements, you kind of bring this back in now, and it seems to be a little bit like all this good work you've done, and then all of a sudden you have this wider population to be thinking about again, because you've done the risk assessment procedures, and 11 says what you need to do, 17 talks about what you need to do, and then you get to 19 and it doesn't seem to flow. So maybe if you could just take a look at it again.
Josephine?
Yes, I would agree with Julie there. I think that and that's what I took from Julie's comment on Monday. Gosh, was that just yesterday? I think ultimately you're going to adjust the procedures according to the nature and circumstances of the engagement. But you don't know yet. You may have got events and conditions already identified that cast significant doubt, but that isn't driving this particular requirement at this stage. And so I would agree with Julie that it's probably confusing to have it there, and it probably sends us in the wrong direction anyway. Thank you.
Okay, so Tom, if I may, so and I'm happy, and we are happy to go there by taking out, including the nature and circumstance of events and conditions that may cause significant doubt, because I agree, it doesn't lose the meaning of what we're trying to achieve. But I just wanted to test with the board. We're happy to take it out. And is that okay? Or is anybody getting any allergic reactions if we take it out? Okay, then that's that bit done. Some other work to do.
Some progress. The last bit is always the hardest, maybe. No, we're so close. Okay, thanks. So any other things you guys want to bring back?
Maybe if I can just come to, in response to Robert's comment about the order 74, 75. It was somewhat deliberate. Oh, and Bill just took my piece of paper. Thank you. Because 74 sets much more the principle, because that's where we refer to both fair presentation and compliance framework, and that this is where we're trying to articulate that, yeah, regardless of the financial reporting framework that you have, and we already refer to in view of the financial reporting framework in 32 where this relates to, so we didn't want to repeat it here, but this is more the overall concept, and then in 75 we go into a little bit more detail on what it means for the purpose of a fair presentation framework. That was our thinking in the flow, and we thought this was a more logical flow than rather than starting with an example or with a statement about fair presentation and then going into the details. At the end of the day, it's the same material.
Mayor,
Of course.
Both numbers, 74 and 75, they describe the close call situation. Is that correct? And 75 in a more detail for fair presentation framework. I would do one number, but I will, if I get my computer working in this Wi-Fi, I will send you the suggestion.
Thank you, Robert.
Yeah.
NATO specifically asked me to block your Wi-Fi.
The microphone's still working, unfortunately.
I only have so much ability in this organization. Okay. Would you like to say anything else before we close the session?
Yes. So board has given us something to think about in respect of A72, which we will. So that's, I think we have now a clear understanding of the 32 paragraph, the related application material, and 33. We've discussed 19. I think so this is what we wanted to bring back based on the discussions that we had. We are making some relatively minor changes here and there based on board comments that I do not think are controversial. And you will be seeing those on Thursday at 5:30. But it also means that if anybody has any significant concerns with the change that we haven't made, please raise it now, or let us know overnight, because these are the areas where we were considering. This is where the biggest changes are. Wednesday. Oh, this Wednesday. Sorry. Yeah. Keep being confused. I also referred to the fraud fraud task force earlier today. Yeah.
Okay. Any other comments, Brett, Edo, and team? Hey, Philippe, any perspective you want to share?
No, thank you, Tom. It's
Thank you.
okay.
Thank you.
We don't want to add complexity to complicated situations.
You want to keep us as a going concern. So thank you to the team. A little bit more work. We're getting there. We're almost to the finish line there. Tomorrow morning, we're going to start off with on the substance of targeted issues on a listed entity in PI. I note that we received an email from the team. Sue, do you have anything you want to introduce related to that?
No, I mean, I hope it's just responsive to the comments, but I thought it was worth just taking that brief time to talk the board through the changes we're proposing, particularly since at least one and possibly another, if people have a different view, we then have to replicate elsewhere. So we just want to check that people are okay with what we're proposing in principle, so that we hopefully come clean to it on Thursday.
Okay. Billy?
Just one thing that the team wanted me to alert you to is that email says going concern, and it's not the going concern proposals, it's the PI proposals. The email went out around 4:40 p.m. So that's the PI proposals, not going concern.
When you open the document, it would have been very clear. Which all suggests that we're very close to the closing hour to begin with. We talked about extending the executive session. I'm suggesting we don't do that right now. I think we close the meeting to the public. I just want to handle one or two administrative items before we leave. But Michelle, you could close the broadcast right now.